And welcome to ET Now's Buy Now, Sell Now with me, Varun Hirimak, and along with me, Mubina Kapasi. Let's get a move on. Hi Mubina, morning. The markets seems to be wild swings happening. We're up one day, down one day. For today, we're hovering around 11,250. Pharma and FMCG index are defending the gains, while we do have a host of stocks which are losing, which I'm sure Mubina will take you through comprehensively in just a minute. But till then, let me just take you through the further headlines. We have a check rush again, Reliance very much in focus. It seems that Abu Dhabi Mubadala is eyeing a $1 billion stake in Reliance Retail. This is in addition to the general Atlantic check, which could be coming into the tune of 3,675 crore once again for Reliance Retail. So pre-money valuation of 4.28 lakh crore, 0.84% equity is what the general Atlantic investment will be garnering. Now, how stark a resemblance is this to what we saw with the Geo side of Reliance just about a month and a half or 2 months ago, where we just saw day after day checks coming in, and it'll be a very important one to keep your eye out on and something that really supports our markets. Then BPCL nosediving, unfortunately. The government has extended the bid submission for the 4th time now. The next deadline is November 16, so clearly some participants getting slightly annoyed at that. We then have Lakshmi Vilas Bank that is also hogging the limelight today. It seems that PNB is in talks with the RBI for acquisition of Lakshmi Vilas Bank. Now let's remember, this is only if the Clicks deal completely falls through, which seems it has, considering LVB rejected the board member suggestion that was made by Clicks Capital. So PNB is reviewing the capital needs and the financial position at Lakshmi Vilas Bank, as well as the NPA position. Depending on how much value they find there, they might go ahead with it. Finally, just some commentary coming in from the Finance Ministry to ET. They're looking at different ways to support borrowers, and there should be some further relief measures coming in very soon. And then one major global thing we want to track this morning, the presidential debate kicked off between Honorable Donald Trump and then his competitor Joe Biden. There'll be a series of debates. Today was just the first one. It's going to have an impact on the market, so keep your eye out on that one as well. Back to you, Mubina.
Thanks, Varun, for that. Those are the big headlines we are tracking for you. But a reminder for all our viewers, we are going to get you an interview that you do not want to miss. The master investor himself will be giving an interview to ET Now, and you can listen in to his post-COVID prescriptions, whether there is a bull run waiting to unfold after the COVID gloom, and which are going to be those post-COVID multi-baggers. This is an interview that you cannot afford to miss, and it is coming up exclusively on ET Now very soon. And the other big special feature on Buy Now, Sell Now is our BNSN quiz. Day after day, we test your knowledge on the Lal Street, on individual companies listed on the bourses, and you've been tweeting to us. Today's BNSN quiz question is on your screens. Which one of these banks trades at the highest PB, or price to book valuation? Is it Kotak Mahindra Bank, Bandhan Bank, AU Small Finance Bank, or Citi Union Bank? The answer may seem very simple, but indeed it is not so simple. So you've got 45 minutes. Put on your thinking caps and tweet to us on our ET Now handle. We will reveal the correct answer as well as our BNSN quiz champions for today at 11:45 a.m. And markets, meantime, what are we up to as we speak? The Nifty 50 is, or at least was earlier in the day, trading with a bit of a negative bias, but now we have picked up some steam and picked up quite smartly actually, because we are now trading with gains of 0.33%. So I think we're up almost 50 odd points from the low point of the day. We have the mid cap and the small cap indices as well that are trading with a positive bias. So I guess that's pretty interesting. In fact, it's a 90-point recovery from the day's low. The Nifty Bank as well has actually managed to recover more than 300 points from the day's low. What's really leading this rally is the FMCG space, which is up more than 1% in trade. Technology, yet again, stable as ever, 0.4% of gains. And even a sector that was actually in the red for the earlier part of the day. The Pharma index has rallied almost 2.5% from the day's low. Otherwise, media, realty, PSU Bank, FMCG, all of them have rallied more than 1%. Top gainers then, all from the pharma space. DRL 4% higher, Cipla 3.6% higher. HUL and Nestle from the FMCG space as well, doing their bit to support the Nifty with gains of almost 1.5 to 2%. But on the flip side, it's the utility and energy names. So BPCL, Coal India, IUC and Power Grid are all losing in trade. BPCL, the top loser today, Varun, 5% gone.
Right, Mabina, definitely people really getting fed up with the BPCL divestment. When is it going to happen? We've been hearing about it for so long. There's been so many news breaks, so many sharp stock price reactions, but there's no follow-through action, and that's something I think which is now very important for that counter. But let's dive away from that and actually look at what a major brokerage has to say about the Indian markets. And I'm talking about Citi. They've put out a note on their current India strategy. Now, they interacted with 25 plus investors that obviously manage a very high AUM here in India. And what came out of these interactions are that the most discussed stocks are ICICI Bank, HDFC Bank, Reliance, Infosys, HCL Tech, Airtel, and Maruti. So financials, IT, pharma, these were the three sectors where their strategy is focused. Now, what's interesting to note is that assuming FY22 would continue to be a normal year, even within these three spheres, which everyone calls the bull sectors of the market right now, they're being very selective. So they prefer an Infosys to a TCS because it offers a slightly cheaper valuation, and the performance now seems to be catching up with TCS. They prefer this to an HCL Tech, which you actually, if you look at the performance, has outperformed in the recent months. So if you want to take the most bullish call in IT, you would probably go with HCL Tech, but Citi is choosing an Infosys. So that's the approach. It's more selective. They haven't really mentioned their top pharma picks or financial picks, but then again, if you look at ICICI Bank, HDFC Bank, Kotak Bank, they're pretty much sticking to the larger privates where they find a lot more security. And then in the case of an ICICI Bank, within the larger private, you have a stock which has not really performed well, so it also offers tremendous upside. So that's pretty much the gist of this note in a nutshell. Still very focused on India with a focus in these three sectors, but as valuations get stretched, they're getting more and more selective, and there's obviously going to be a greater flight to quality for their future investment thesis. So that's what that note was all about. But now, yet again, switching gears, let's go over to the BNSN cloud for this morning and see what it has to offer. While my producer brings that up on your screen, it's got quite an interesting mix of stocks this morning for various reasons that we'll be flagging off. Now, we're beginning it with GMM Pfaudler, 2 days of circuit. Let's remember it came from 6,000 to 3,600, lower circuits every day, no chance to really buy or exit. That took a sharp turn, and now we've had 2 days of 5% gains, and it seems that a marquee list of investors should be out soon. We then have Vodafone in there this morning as well, because they are going to be borrowing 1 lakh crore, it seems, in order to fund various capexes as well as working capital. They're looking to raise some money, so that's what's got that counter in focus. BPCL has been spoken about enough. I'm not going to say anything more. You know what's happening there. Reliance, 2 checks, General Atlantic, and it seems that more and more investors are lining up. Mubadala also looking at $1 billion investment here. Then we have auto stocks in the back of a JP Morgan note, which says passenger vehicles retail growth has really been surprising. So that's got the entire auto sector in focus. Bharti Airtel has a strategic press conference today at 1:30, so keep an eye out for that one. Then Welspun Corp has won around 1,400 crores worth of orders, so that's going to bode well for them. Godrej Properties has a new project in Bombay which is going to be launching. And then PNB and LVB, like we mentioned in headlines, it seems that PNB may be the next person to attempt acquiring LVB. But then again, right now it's report based, and we'll be looking forward to hear more from the companies when they do get back to us. Over to you, Mabina, for some technical and fundamental chatter.
Okay, and let's now introduce on the show Kunal Batra, as always, on the technicals. And today we have with us on the show Gaurang Shah of GeoG Financial Services. Morning, gentlemen. Thanks so much for joining us on Buy Now, Sell Now. So to start with, Kunal, over to you. Your view on the equity markets, as well as share with our viewers your high risk and low risk ideas for today.
So good morning, Mubina. I think the market action in the last 3-4 days has improved slightly. We've seen a bout of short covering in the last 2 days, particularly I think on Friday and Monday. Yesterday was more of a mild bit of a day for the indices. Not much of a queue, which transpires even today as well. it's very, very stock specific. So you look at the advanced time ratio, you look at the sectors and the stocks within the sectors moving up higher. It's not showing any major synchronized price uptick. So you have, for example, only the pharma stocks which are moving up higher, few FMCG names are moving up higher, and just individual stocks from the sectors which are moving up higher. So in this kind of a market, it indicates that it's going to be more stock specific. It's likely that the indices could go through a bit of a sideways range for at least the next couple of days before you see any kind of a trend pickup. Now, the two levels which I mentioned yesterday as well, that are something to watch out for from a trader perspective. One is in the 11,300 mark on the Nifty. I still believe that that's an important hurdle. The indices need to cross and close above it for a sustained confirmation that we finally managed to come out of the downtrend. And on the support side, I believe 11,100 to 11,000 levels. I think these are very strong support levels. Until the time the index is trading up, above these levels, traders can hold on to the long positions and probably have even a long bias in individual names. With that, I'll now indicate two buy calls. The first one is from the low risk criteria. Would look at Godrej Consumers as an interesting buy. The stock finally managed to show some signs of recovery this month so far. The stock is up by 11.5%, 12% for the week as well. The stock seems to be have picked up a good pace. On the daily and the weekly charts, there have been some strong breakout confirmations. For Godrej Consumers breaking out and an Ichimoku pattern, which is a technical pattern breakout that generally results into a multi-week rally for stock prices. So I would suggest the ban Godrej Consumers targets to be kept at 780. Stop loss could be kept at 700. Would term this as a slightly low risk idea given the kind of low beta nature of the stock. The second would be from a high risk category in Saban Canara Bank. Again, I think the PSU banking stocks are showing some signs of a synchronized trend. We saw SBI, Canara Bank, PNB, Bank of Baroda, etc. going up, doing pretty well over the last 2 days of the recovery on the bank Nifty. Yesterday was a bit of a pause, and these stocks have managed to come back again quite well today. So I think that's a very strong indication of a new trend in the making for PSU banks. Would term this as a high risk buy, but a target of almost 100 on Canara Bank, and stop loss to be kept at 84 rupees.
All right, there you have it. Those are the top ideas coming in from Kunal, high risk and low risk. Gaurang, over to you then. Before we get your ideas as well, I just want to get in your fundamental take on the equity markets, on the valuations. Many people did say that India at this point of time is overvalued. We've seen about a 300-point correction come by from the recent highs witnessed. So your view on the overall equity markets and, of course, your high risk and low risk ideas.
Thank you, and morning to all of you. So I think valuation, I mean, if you have a high risk appetite, I don't think you would mind venturing into the market to find those, ideas to invest in. And there are pockets, sectorially, individual stocks, which look very attractive. So it totally depends upon individual to individual, investor to investor, as to what kind of comfort one derives when it comes to valuation. For us, we do believe that there are investable ideas even at current level. And not to forget, I think from the lows of March 2020 that we saw, 7,500, correct me if I'm wrong, Mobina, on the Nifty spot, to 11,200 where we are right now. So in a matter of maybe 6 odd months, I think you have covered a very decent ground, if you will. And in that kind of a scenario, it is always good to see market consolidate. It is healthy for the market. We see it that way. You make a base, make a strong foundation so that you can withstand the next up move that you are likely to see. And under all possibilities, I think by the time we see end of October 2020, we should be somewhere close to about 12,000 on the Nifty spot I'm talking about. Having said that, and referring to those investable ideas, I think the first stock idea, both are in fact fundamental, Mubina. So they are low risk. They are not for short term, medium term. They are with at least 1.5 year time horizon. So the first one is from the fertilizer stroke chemical space, specialty chemical space, that is UPL, earlier known as United Phosphorus Limited. Now it is known as UPL. Whatever the government is doing in terms of reforms for the agriculture sector, plus the policies to reduce the dependency that we have for certain intermediaries when it comes to making fertilizer. I'm talking about the China policy post whatever has happened. Our sense is that United Phosphorus Limited, UPL Limited, will be one of the beneficiaries. And from a long-term point of view, we have a target of 665. The second one is from the discretionary stroke consumption space, that is Bata India. We heard the last quarter gone by on the management that they are planning to shut down the unviable stores. They are planning to focus more on value addition stores, larger stores wherein they can definitely have more footfalls and contribution to the sales top line, bottom line. The new range of products that Bata India has offered has definitely found some traction amongst the consumers. And more importantly, there are anti-dumping duty for certain products that come in to India from China as well as Bangladesh when it comes to footwear industry. So we believe that, and this is one stock which has actually shown tremendous performance, targeting 1680 from a long-term point of view. And mind you, Mubina, if the earnings are much better than what our estimates are, definitely the targets get revised.
Okay, thanks for that, Gaurang. It's time for a quick break here on Buy Now, Sell Now. But before we do, once again, let's just bring to your attention, there's a mega interview coming up here in ET Now. We have the big bull, Rakesh Jhunjhunwala, in conversation with our managing editor, Nikunj Dalmian. Whenever these two get together, it's a very insightful interaction. So keep your eyes out for this one, coming soon to ET Now exclusively. You don't want to miss this one. Quick break, be back soon. Hello and welcome back to Buy Now, Sell Now. Before we get to the queries part of our show, let's once again tease the quiz so you guys know what the question is, and you should be tweeting to us at either the ET handle or the Buy Now, Sell Now handle. This question has been posted. Which one of the following banks trades at the highest price to book valuation? Kotak Mahindra Bank, EU Small Finance Bank, Bandhan Bank or Citi Union Bank? The answer is not as simple as it seems, so do have a closer look at the latest average price to book over the last year. That's the figure we're keenly looking out for. And at 11:45 sharp, so in 20 minutes or so, we'll be announcing the winners. If you'd like to get featured on the channel, do post a response quickly. With that being said, now ready to move on to our queries. And Kunal and Gaurang are both still with us. So the first query is from Ashish Alawat. This is a Twitter one, and he's keen to buy 1,000 shares of ITC for the long term. Should I invest or wait for government's Sutti stake sale? So Kunal, what is the chart of ITC telling you? Good entry point or avoid for now?
So yeah, I think if the question is purely on the chart patterns, then I believe that it's a good entry point. I think this 160, 170 zone for ITC is a good support zone. There are many long-term indicators which are getting into the oversold territory for stock like ITC. That generally first indicates that the stock may remain a bit in a bit of a grind for some more time. But eventually, I think accumulation happens at these bottom formations, and the accumulation is a process of 1 to 3 months, depending on the kind of individual stock and the nature and the beta nature of the stock price. But nevertheless, I think for ITC, I believe that these levels are good, attractive levels where you should look out for venturing into the buy and holding on to it from a long-term view.
Okay, short and sweet. Kunal likes it at the current price. There's pretty much limited downside. Gaurang, coming to you, fundamentally the dividend yield on ITC must be off the chart right now, but obviously 80% of your EBITDA is still coming from tobacco. So is this stock really going to go anywhere, or is it just going to be stuck here for forever?
Well, that's $1 million question, Varun, and it has frustrated a lot of investors, short term, medium term, long term. I agree with Kunal that sub 160, the downside looks to be very, very limited. But then what is your upside? That's the very important question that you have to ask. And the upside could be limited to maybe 180, 190, given the past track record that we've seen of ITC. And as you rightly mentioned, since large part of their business comes from tobacco products and cigarettes, and now with one more hurdle in the way in form of banning of sale of loose cigarettes in Maharashtra, and that's going to impact. And if that state by state has to follow that, then I think large part of the revenues may get impacted for ITC. Having said that, we do have a positive coverage on ITC, but it is purely with 1.5 to 2 year time horizon and a fundamental call with a caveat that you should not buy everything at one time. You should break it into parts and buy. And if you really don't have that much of patience, then there are much more stronger names in the FMCG pack, starting with HUL, followed by Tata Consumer, Dabur, Marico, Nestle, Britannia, Godrej Consumer Products Limited. I think these are the pockets in the FMCG space which will show better and faster recovery in terms of return on investment compared to an ITC. Not that we are negative, but it may possibly test your patience.
Okay, fine. Thanks for that, Gaurang. So ITC, it seems that you can't lose much, but will you make much? Who knows and when? The next query is from Radhika Dewan of Jaipur. Bought 100 shares of Tata Consumer Products at 280. Should I hold or sell amid the rally? Kunal, coming to you first. I know what a fan you are of this stock and of this chart. And given that Radhika has entered at 280 rupees and now nearly doubling her money, should she even be looking at a sell as a viable option? What's your advice?
I think one simple advice: you should definitely hold. It's a stock which is signaled, long-term breakouts on multi-year time frame charts, and I believe that the upside potential could be significantly high for Tata Consumer, even from current levels. You bought at a price of 280, so as it is, you have a lot of buffer and cushion attached towards it. This is one stock which you should definitely hold from long-term view. I would suggest a hold.
Okay, Gaurang, what about you? A lot of the fundamental guys talk about Tata Consumer and then they say, how can dal and salt, even if it's being branded, get such a crazy multiple? But perhaps, you have a different view on the business that you'd like to share, which perhaps justifies the recent run-up that we've seen from those 400 levels.
So I just mentioned about Tata Consumer, and we remain positive. But most importantly, Varun, you invest because you want to make money. She's making almost 100% return. If not 100, the complete quantity, at least sell 30, 40, 50% so that bring home your capital and a little bit of profit. And maybe balance you can stay invested since we remain positive. But given the return that she's making, prudent to take some money off the table.
All right, well, that's the view then coming in on a Tata Consumer that our viewer has asked us. ITC, Tata Consumer, these two have been stocks that we've been getting questions and queries from a lot of our viewers in the last couple of days. Okay, moving on, a question on a company that we really have not been getting too many queries on. It's KEC International. Rahul Tyagi from Lucknow says he has purchased a couple of shares of KEC at 308 rupees. He wants to know if he must continue holding on to these shares. Kunal, any view that you've made on KEC on the charts?
Yeah, I was looking at the charts, last few days as well. It's a stock, it's a mid-cap name which has done pretty well for itself. Last 6 months, it's more than doubled from 160 lows to almost 340 or 350, which the stock tested a few weeks back. So I think in that regard, it's a stock which has done reasonably well for itself. Whether the stock will continue to move up higher, it seems like, because the long-term patterns for KEC as well seem to be fairly attractive. So, provided if you're a long-term investor and if you're ready to hold on to it from a longer-term view, then KEC is a quality mid-cap name. It's a stock which has shown signs of solid trends for multi-year time scales, and I think that's what you want for a characteristic of a stock. So I think that regards, from a long-term view, yes, you should be looking to hold on KC. I would probably place targets of somewhere closer to 400 to 440, even if your time horizon is 1 year plus. But if you have a much more longer-term time horizon, then the targets can, of course, increase up higher significantly.
All right. And Gaurang, what about you? Any view that you have on KEC International, on the fundamentals? This one is well closely associated with the infrastructure space, with the power space. So any view that you formed on KEC?
Sure, Mobina. So we do have a positive coverage on KEC International, and it's one of the mid-size capital goods and engineering company. The best part is, as you were mentioning, Mobina, it's a diversified business coming. The balance sheet gets contribution from all the 4 sides, and very strong order book with equally strong execution capacity. Long-term hold on should be targeting 400 plus.
Okay, thanks for that, Gaurang. And it's now time for our Chartbuster segment with Kunal. He's pulling up very interesting technical charts for us to take a look at and perhaps make money pretty quickly. So Kunal, what's your Chartbuster for the day?
So it's a comparison, Varun, on the Nifty index and the small cap index. Now, last week I was comparing, the Dow Jones versus the Russell 2000 index, which is the small cap index in the US market. And there was some, stark comparisons over there. There was an indication there that the, small cap index is underperforming the large caps, and there is sign of more strength in the large cap names. But our markets are showing a bit of a divergent signs over here. Now, from the March recovery or from the March lows, if you can look at the both the lines, the blue line is the charts for the line for the Nifty prices, and the red is the line for the small cap 100 index. If you look at it, you have marked the shaded region in the period of April, May, June, and July. These were the period of 3-4 months where both of these indices they moved in sync. In an uptrend. In an uptrend, by in a pattern of higher highs and higher lows. These are classical signs of trend. But come in the month of August and September, there have been 2 divergent signals over here. So if you can look at the blue line has relatively made a lower top. It's also broken its major support over there, the previous swing support we call it, and then the index has corrected post that. But if you look at the red line apparently, which is the small cap 100 index, has made a higher top. Now that signals that even when the markets were consolidating, there was strength in the small cap names. When the markets went through a correction, Nifty fell by almost 1,000 points. Small cap index went through a double bottom test. Now double bottom tests generally and typically are ideal strong support levels. So what this reinstates is that over the last 1 month, 1 to 1.5 odd month from August to somewhere is where the market breadth has opened up significantly. The small cap and the mid cap end of the market has started to perform very well, and the large caps are the ones which are taking a bit of a beating. Now, if there is any kind of a trend which is to be seen over here, it indicates that this is likely going to be the pattern for some more time, where the index or the Nifty would probably consolidate. Large cap names would probably go through a bit of a churn, but the small cap index, provided that the small cap index is above its double bottom support, I believe could find more buyers. So I think that's where short term as well as medium term traders can focus upon, because I believe that the market breadth can keep on improving as now the index consolidates in this range.
Okay, thanks for that, Kunal. Big thank you to both our guests, although I think Gaurang's already left. And on that note, we'll slip into a quick break here. Welcome back to Buy Now, Sell Now. It's interesting to note that in March, when the crash happened, it rattled all equity investors. Then I think from a phase of April till August, people genuinely got spoiled and we only saw the market move in one direction. Now, September has traditionally been a tricky month for the markets. And this year, the situation remained intact, despite this year being an unprecedented one for global markets and economy. Jayesh analyzes the performance of global as well as Indian markets in what they're now calling a spooky September. Listen in.
The month of September has been seasonally weak period, not only for the Indian equities but for the global markets as well, because if you have a look at the US market, all three indices are set to snap their 5-month gaining streak and post their worst month that we've had since March 2020 as well. The dollar index, which has been at the forefront of the limelight and has been impacting the emerging markets as well, that is set to snap a 5-month losing streak and post the best month that we've had since July 2019. Gold also, set to post the worst month in over 5 years, and you have oil, which is set to snap its 4-month gaining streak, along with LMEX index, which is also likely to snap its 5-month gaining streak as well. But moving on to some of the highlights that we have captured from the Indian markets, the Nifty is on track to snap its 3-month gaining streak, while it has been the Nifty Bank which has been the rank underperformer, and it is set for the biggest monthly underperformance over the Nifty since March 2020 as well. The broader market indices are likely to extend their gain to 4 months in a row, while you have the Nifty IT index, which is set for the best September since 2010. On the other hand, you have the Nifty PSU Bank index, which is set to decline for a 4th straight September. The India VIX index, that is likely to decline for a 6th straight month in a row. And if you have a look at some of the other sector indices, you have the pharma space along with the auto space, which is likely to post gains for the month of September. But you have a lot of losers in terms of the Nifty real estate, the metal index, along with the FMCG and energy pack as well.
Okay, thanks for that, Jayesh. Very interesting analysis indeed. But now the moment you've all been waiting for, the BNSN quiz question, and perhaps some of our early responders have been looking out for this since the beginning of the show. So once again, just to reiterate, our question to you today was, which one of these banks trades at the highest price to book valuation? Now, instantly I'm going to eliminate Citi Union Bank. It's nowhere close. Even Bandhan Bank post the fall is nowhere close. It's a tight race between Kotak and AU Small Finance Bank. But if you look at the average price to book, it's AU Small Finance Bank that takes the lead, and that is your winning stock, which trades currently at the highest price to book valuation among Indian equities, although it is far smaller than the other banks mentioned. So we have a whole host of winners. I think a lot of people got this right. We have Aditya 4556, we have Pramesh P1, and we have a Tawfiq Azad 1 as well, who all got the correct answer. So congratulations to you all, a hearty one at that. Keep tweeting to us, keep replying, and keep testing your knowledge of the equity markets. We'll be giving you at least one question per day. Time for another quick break here at Buy Now, Sell Now. Plenty lined up, don't go anywhere. Welcome back to Buy Now, Sell Now. My colleague Ruchi Bhatia is now with us on two very important stories. Hi Ruchi, welcome to the show. We first need to get an update from you on what's happening at PNB and LVB. How likely is it that PNB is going to be the acquirer for this bank, and what are the conditions which need to be met before that can happen? Second, what is happening with the BPCL divestment? Now the bid process has been delayed. So one by one, if you could first update us on the banks and then BPCL. Okay, it seems that we're having some technical difficulties right now trying to connect with Ruchi. So just to give you a little background on what's happening at these two, at PNB and LVB, we all know LVB First India Bulls was the company that was trying to acquire this bank. They were denied a banking license by the RBI, so that went on hold. We then heard that Clicks was coming in and that they were looking at LVB very closely. Then Clicks reached the end of their due diligence process and they were pretty much going to nominate members for the board. Then it seems that LVB wasn't too keen on that either. Now it seems that PNB is the latest bank, and it's the second largest PSU bank in the country. So in terms of its ability to buy out LVB, that's not a problem. It's just about getting the subsequent regulator and shareholder approvals. But the process is what Ruchi was supposed to walk us through. I'm not sure if she's with us yet or not. But as soon as we connect with her, we can get some more clarity on that. Okay. I think Ruchi is going to come back to us at a later time for this story. In the meanwhile, let's get you what's happening at Reliance. And there's a lot happening at that counter, as you may have heard. A series of checks coming in from Silver Lake, General Atlantic, now Mubadala. There's just so much fundraising happening at this company, and all of it on the retail side. So the last 10 checks were on the IT and Geo side, essentially the digital side. We're now looking at all this focus in the retail venture. It's valuing Reliance Retail collectively at around 4.29 lakh crore pre-money. The latest check from General Atlantic is for a 0.84% stake, and this will take their investment size to around 3,675. So now Reliance Retail has raised around 16,000 crore. Let's remember, net debt at Reliance already turned negative post Google infusing cash. So now we're sitting on net cash, I believe. So it'll be interesting to see how this money is really going to be deployed. Keep your eye on Reliance. Lots of triggers there as far as investment is concerned. And on that note, I think we've run our course here this morning on Buy Now, Sell Now. Thank you so much for tuning in. Keep it with ET Now. You have markets at noon coming up next.